Hey, welcome to the closing beat. Happy Tuesday, right?
Almost.
It's Tuesday. Welcome. We were just saying, like, if you could imagine the things we talk about right before the show starts. Woo! Okay. Hey, welcome. It's a stock market show. This is what we do here. We talk about the stock market, how everything's going for the day. We'll give you some interesting stats and all that good stuff. If we help you, you're supposed to hit the subscribe button. It's like common courtesy, right? So hit the button there, log in, do your thing, hit the thing there. Bad news, no show on Friday because we're going to be laying tile, me and Cody. Oh, I took Cody's mic. You can't say anything. That's all right. Man of a lot of words anyways. We'll be doing tile. So no show on Friday, but we'll be here the rest of the week, of course. We have some great videos for you this week on our FinTip series. How much to invest in a Gap account came out yesterday. Tomorrow we've got average market returns are anything but average. Kind of a cool thing. It's a class we did for customers a while back, and I'm going to share it publicly with you guys. And then on Friday, we're going to show a study about how many of you were opening brokerage accounts last year and were brand new, and how'd that go for you? Who's opening those accounts? How much are you putting in there? You know, they track every single thing there. Also, on our research site, if you want to join us, jazzwealth.com/research. We're not currently taking new customers right now, but you can join the research site if you'd like. And if you're a customer already, then, of course, the research site is free. Everything is free for you. And it's got some cool posts on there, actually. We got a cool little Super Bowl post that just went up, and a couple other ones from last week. So I hope you enjoy that. Check that one out there. And this Thursday, our Wine and Wealth class over here in the Speakeasy is going to be on how to analyze the stock market. And we're actually putting the final touches on a really cool tool to show you how I come up with all this stuff really, really fast and kind of figure out where everything's going, where's money moving and all that. Well, we built a tool for you guys, and it's actually a really in-depth tool. So we'll be going over that on Thursday for you guys. If you look at the stock market, pretty much a flat day. There's not a lot of jello on the plate, so to speak. It's just kind of a back and forth type day. You can see the performance of the markets off to the side. Got some good news for you. Here is the number of U.S. coronavirus cases per day. We're falling all the way back to where we were in late October. So good news there. That's also a reason for the stock market to be at a point where people are pretty optimistic. We want to take it a step further. We can see the actual the deaths per day also starting to flattening out just a little bit. Kind of excited to see that. If you take a look, you've got New York. We'll start with New York here. New York, Texas, and California still have the highest number of cases per day. Obviously, population issues there. That's New York. This is Texas as well. Little blip on the chart. Not sure what that's for there. And California, which I don't have on here, those are still the highest number of cases per day, but they're going in the right direction, right? So, whether you live in these states or whatever, you got Texas moving a little bit south there, starting to bleed off a little bit. New York, probably the most interesting because of where they came from, where they're at right now. They also maybe starting to open up Broadway again, maybe get to go see some plays over there. You've got Arkansas, Tennessee, and Wisconsin on a percentage basis have the largest increase week over week, but those are also heading in the right direction as well on average to the downside. So Tennessee, for some reason, saw a quick little sharp blip there. Week over week was a big change percentage-wise, but not too bad. And Wisconsin. Basically, we're heading in the right direction. That's good news. Investors think that's good news as well. And so because of that, you got a little bit of optimism there in the stock market, at least as of now, is what we got. Did you push up the other thing?
Yep.
The other thing is going up. Okay, so I'll just refresh these pages and we'll get going there. As far as the stock market goes here today, it's the Russell 2000 again, right? It's the action of the Russell 2000. That's basically where everything is at, up 17% in the last 5 weeks. Here's the Russell 2000. There we go. Kicking at new highs, looking good there. 17% the last 5 weeks. Man, can we show a rolling 5-week period? Do you think I could do that?
Yeah.
I could do it?
Yeah.
Okay, let's try it. So we got a new little tool here. We've had the calendar search, the ability for you to be able to search. I'm going to refresh just in case. The ability for you to say, hey, how often does something happen in a given month? Now you could be you could say, I don't care if it's month to month. I want to know over a certain amount of time. So let's try this. You got the Russell greater than, we'll say 15%, because it's up 17% in the last 5 weeks. So we'll say, how often? Are you nervous? Is this going to work? A little bit. Yeah. Looking back 20 years, let's see what happens. Is it going to work? That's it. It works. Okay, 15 times in the last 20 years has the Russell 2000 gained more than 15% in a 5-week period, right? So looking back, just a rolling 5-week period there. Here's all the different times that that's happened. You can also look and see over the next 5 weeks. What, you scared? Scared it didn't work. So we've got the performance of that going forward. Only 15 times in 20 years. That's rare, right? You got to say that's odd. Something like that is totally odd there. We've been reducing exposure in our small cap fund as well as some of the others, and I'll show you why. Here is another way to look at it. You've got the Russell 2000 as it pertains to the 200-day moving average. In other words, how far stretched did it go over for the 200-period moving average? Look at this. If we go as far back as we can with the Russell, this is just since the day of inception here for the IWM, it has never been this extended from the 200-day moving average ever. Ever. So if you're buying at these levels, what are you doing? You're buying at levels you've never seen before, extended levels that you've never been able to buy before. You have to be looking at the Russell 2000. Any stocks you have in there as well, a lot of the stocks in there, you've got to be looking through it and saying, why am I paying that much? Why would I want? Think of it as a car, right? The price of a car relative to the average over 200 days. You are paying over 60% of the cost of that car relative to its average. So are you getting a good deal or a really, really bad deal? It's a really bad deal is the answer there. All right, going over here, we'll take a look at the Dow. The Dow's up 3%, just about year to date, sitting at new highs there. Not a whole lot going on today. You got Boeing helping things out. Did its job, up 1.5% on the day. United Healthcare, which is the most heavily weighted stock in the Dow because it's the highest price there, bouncing basically off the 200-day moving average, up 1.6% as well. And Goldman Sachs, the financial pullback that we talked about, all that was perfect, just played out really, really nicely. If you go into the S&P 500, up about 4.5% year to date. This is kind of interesting. About 50% of the S&P, is 47% exactly of the S&P 500 is 100% off of its 52-week lows. So you're going to find that the 52-week low for basically everything is right around the March 23rd area. There are about half of all the stocks in the S&P are now 100% above that. That's a little odd itself. It's not rare, but that's a little bit odd there to see such a big gain. Some of the stocks in the news today are going to be Hanes brand. As Warren Buffett likes to say, they cover the asses of the masses. That's how he says it anyways. You think of them as underwear and activewear. That's basically how you break it down. Underwear is 30+% of their business. Activewear is like 24-25%, somewhere in there. Well, anyways, they reported earnings out today and did well. They beat on earnings. If we look through, where did I put it there? Activewear was the problem because of the competition. You had colleges closed. You had less sports going on due to the virus. Remember, we're looking back last year, last quarter. So activewear was a bit of the weakness there. Starting to recover. They had some good things to say about that. More being sold, and of course, more underwear being sold as well, which is the bulk of their business. So that stock very cleanly and clearly at new highs. Coty, C-O-T-Y. C-O-T-Y, these guys make makeup. If you wanted to have a makeup brand and you wanted to slap like Kylie Jenner, and you wanted to be like, hey, I don't know how to make makeup, but I want to put my name on makeup and call it great and sell it for a lot, that would be these guys. That's what they do. Back into the range here, sadly, right? It was trying to break out, all was looking good, fell all the way back into the range there. Revenue's down 40%. Gross margin's still good, so even though they have less coming in, they're still able to charge a premium for that. That's good news, but ultimately bad news as far as earnings goes. As far as the stock market goes, it's today was sort of like, let's just go with what's working. And by that, I mean financials, that pullback's worked. Consumer staples, that pullback's working. Sprinkle in some of the tech stocks, Twitter and Netflix, not all of them, not Facebook and Amazon. Those have been a little bit of a disappointment there. Energy as well. That's where the money's at. That's where people are just saying, all right, that's working. I'll stick with it. I'm not going to just go ahead and get out. Of course, small caps as well is part of that action if you're looking. If we go over to the sector breakdown for the day, I can do it over here. So we're going to take a look at energy, and I'm going to go into our sector portal here. There we go. Energy took a bit of the day off there. It's the best gainer year to date. Energy up 15.3% year to date. A little bit of a break today. If I go inside of it, ExxonMobil is going to be one of the drags on your day here. It was the majority of the declines here today. Oh, over half at least. ExxonMobil, Chevron, and Pioneer were some of the weaker ones that had a bigger contribution. You can kind of look over here in the scatter plot if you want and see kind of what's dragging things down relative to their weight. If we take a look at industrials, I just thought industrials, came in a tie for second place here today. I thought industrials looked kind of interesting today because they're near their highs. Here's a 6-month chart of the industrials, almost back to new highs there after being down about 5% year to date. Boeing continues to be one of the big guys there. You got UPS there as well. We happen to own UPS. The biggest drag today, which we own as well, just to be fair, was Carrier. So Carrier a little bit weak and choppy, awfully choppy up here at these highs. That was our worst performer of the day, down about 6% if you're looking through our portfolios. Communication services, let's go over there. That was your best performer here today, right? Comes in first place, but nothing really to be excited about, just a little bit of a gain there. If we look at communication services, Twitter was up ahead of earnings, and with their earnings out, I believe it's up a little bit. Yeah, Twitter's trading at 61.75. So let's go over here, sort by weight. Oh, I clicked on the wrong one. Sort by weight, and there we go. Scroll down just a little bit, and we've got Twitter. There we go. So Twitter closing out the day right around $60, just a little bit under that, 59.87, and it's at 61.90 at the moment. That's going to put it up off the charts. That'll give it. Oh, no, I'm sorry. There we go. That's going to give it new highs, 61.90, very extended. This would be that gap up tomorrow that you would expect would start to pull back or see a little bit of selling pressure. I would expect that anyways. If we're looking through the rest of the stocks in this category, you got Electronic Arts. Hey, look at them go. Electronic Arts bouncing off the 50-day moving average. Activision Blizzard is another one holding up there, looking really strong after having their earnings come out. The drag right there. Right? Reversing course. Take-Two comes back to the 50-day moving average, but if we look at the worst gainers on the day, oh, no, it wasn't the worst gainer on the day. Let's see. Take-Two is not on. Oh, I missed it. There it is. So Take-Two down 6% on a day, but right back to the 50-day. There's a lot of this going on. So if you take a look at a lot of the stocks right now, Amazon, right? Some of these they're not doing a whole lot. They're hovering right there at support. Any kind of technical support just stuck right in there, and that's where Take-Two is at, right at the 50-day moving average. We'll see what happens going forward. All right, we're going to do, let me show you here real quick. Go back here. Here's your upcoming earnings off to the right. This is our dashboard in our portal. So tomorrow, you're going to have Masco. You can see the list, right? There's just a whole list of the stocks reporting earnings. Akamai is going to report earnings. Fox, which has kind of been dead, not doing a whole lot there. Some of the interesting ones, Assurant is in there as well. Tells you if they're reporting before or after hours tomorrow. So a little bit coming up there. We'll see how that goes. New highs and new lows. You got 39 of them on the day. A lot of good ones to look at. You use the new highs and new lows list to build a watch list, right? Not necessarily that you would trade it. Maybe you like Comcast here. It's breaking out. Decent volume, slightly above average, and hitting new highs. I don't know. You got some earnings coming up there, so maybe something to consider. But these are stocks that you use for your watch list just to see momentum, all the momentum traders. Chipotle would be known as momentum stock. Very tight, consistent, and clear uptrend there along the 50-day moving average. You got Dr. Horton. DHI is a ticker symbol. It did hit new 52-week highs, pulled back just a little bit. Generally like the pattern, like what it's doing here. It did a little bit like Amazon, just, I don't want to really move a lot. Now starting to wake up, get back to work, so we'd like to see that. Berkshire Hathaway, we'll go to the B-class shares there. Did it come up? Yeah, it came up. So nice little breakout here for Berkshire Hathaway, likely being helped from some of the Hanes brands move today. Looking good there. Good, consistent uptrend, very steady, and I'm using the B-class shares if you're playing along and taking a look. Willis Towers, WLTW. Now remember, I just saw that. They have earnings tomorrow. So here you go. We got tomorrow, we got earnings coming out after or before the markets open. Same chart here. You can see that breakout, tight consolidating pattern there. This is one where you say, I'm going to wait for the pullback. Let's see if there's a pullback. And if so, that would be a buyable pullback. Earnings coming out tomorrow could mess things up a little bit, but we'll see what happens there and likely be reporting. On the downside, you got Vertex Pharmaceuticals, the closest to making new highs, and Kellogg's. Kellogg's is nice, clean little discounted downtrend here. That one's the second closest to making new 52-week lows. Sorry, I should say it that way. New 52-week lows. All right, stocks in the news, and then I'll take your questions if you happen to have any. Let's start with Simon Property Group's today. There we go. Up 3.6%. They had earnings come out, 91.3% occupancy. Base rents are up 2.2%. These are the things you look at for the big REITs like this. 90% of rents collected, but they fudge the numbers a little bit. So they collected 90% of all rents, but they count deferred rents and the rents that they had to write off because of bankruptcies and things like that. So it's more like 70%, 74%, 75% that they have in terms of rents collected officially, like dollars that they got to keep. The good news is that they have $8.2 billion in liquidity, $1.5 billion or so in cash, which allows them to get well through the rest of the year. And so investors pretty happy with that, seeing this stock as a discount at this point. Remember, I did a thing on this a while back. Simon Property Groups has a different approach to when companies are struggling, like Forever 21, in their malls. Instead of just letting them go bankrupt, they just buy them, right? So they just come along and say, well, we'll buy your company there. We'll see what we can do, but in the meantime, we get to show that's not a vacancy. That's a place that gets to stick around. So kind of interesting how they handle that. I don't know how you want to think of that, but that's what they do. That's how it goes. There you go. We happen to own that, so we're happy to see that move higher. Another stock that we own here, Baidu, up almost 7% on the day, really extended. I don't like to see that one. Baidu comes out. They said that they're doing self-driving cars in China. Pretty cool. I know that's something they wanted to do. EA Sports looking good here. Also comes out and says they're going to buy Glue Mobile. I've honestly never played one of these games, mobile games. They're like 3D games and everything. And EA Sports is going to buy them $12.50. So let's see. That's about where it finished today. They're paying $12.50 a share, paying all cash for that one. Intuit. Yeah, it did rally back. It gapped down this morning, was able to finish with a slight gain on the day. They said tax season starting a little bit later this year. That's going to hurt them in terms of their forward revenue, but doesn't matter. The stock was still higher there. They have other divisions as well, of course. Disney down about 1%. Yeah, we don't do the fun facts on down days for Disney, but hey, it's a little extended, right? Just pulling back a little bit. They're going to get to open the California Disneyland next month, it looks like, after a long and very heated debate. They even moved some of their offices to here in Florida, bought up some real estate and everything, so looks like they're going to open back up. Southwest Airlines is going to do a mixed shelf offering well, they need money. So they're going to be setting that up, no dollar amount yet, and I think that's because they're waiting to see what stimulus will be. Wynn Resorts says that we're not waiting. 6.5 million shares they're pricing at $115. I don't think that was today. I think that'll be tomorrow, actually. And then, do you like your dating apps? Bumble is going to go public. Bumble is the one where I don't think it's just for dating now. I think it's, you can find friends on there. You can find working relationships as well. I have a feeling if I had Bumble on my phone, my wife wouldn't understand. I'm networking. But they're going to go public. They priced $28 to $30, 34.5 million shares. Days to wait for that one there. And that's it. I'll take your questions if you happen to have any. What else do we have? Valero paying out 98 cents and TJ Maxx paying out 26 cents. You got more shifting going on in the S&P 500, S&P 600, S&P 400. Lots of changing going on there. Monolithic, MPW is the ticker symbol. They are going to be moving into the S&P 500 from the S&P 400, taking the place of FMC, which is down decently today on that news. And then Iridium, just all kinds of changes in the S&P 600 and the S&P 500. So now take your questions if you have any there. GameStop should have bought Glue. Yeah, that's a good idea. Yeah, especially with the money they just made. Yeah. Impeachment actually happens. Would there be any implications for the market, or would it, now non-factor? Impeachment-wise, non-factor there, I think, for the stock market. Yep. See the truck. Yeah, it's still right behind the camera. I got to go to the DMV tomorrow. They actually want to see the truck. They don't believe it's an old truck, and they want to get the VIN number and all that stuff. Ugh, I love it. But that's what they say, Spencer. They say Bumble is, it's the dating thing where the woman has to initiate, whether she wants to talk to you or not. But they say we're doing Bumble for friends, and we're going to do Bumble for companies and stuff. They want to expand. I don't know. I don't think I'm downloading that. I don't think that's a good idea. You get that sick feeling in your stomach, like I'm going to be sleeping on the couch, man. We don't have a very comfortable couch. When you invest a large sum into the market, do you have a suggestion for staggering entries, especially when we're at market highs? Well, that would assume that you had no choice, right? So if you could average in, I love it. If you are kind of against the clock, like with a Roth contribution, say for 2020, you've only got like a month and a half to go, that may be a little more difficult. You just go for it. I would just say invest it. But, if you can average in for 2021 or it's just a general trading account, that's pretty cool. I like that idea. Any chances of taking customers again by April? That would be the under for what everybody's betting in the office. Everybody here, I think, what'd you guys bet on? June?
I said July.
Cody says July. Cody?
I think it'll be sooner than that. But
Charlie says sooner than that. I don't think it'll be April.
or
Sooner than April?
sooner than
July? Yeah, probably not by April, but we'll see how fast these guys can move their fingers. Yeah.
you mean this guy.
That one guy. Hey, Dustin, how come there's no Bitcoin ETF, but you can trade Bitcoin in futures? They're working on it. They would love to have a Bitcoin ETF. There's many proposals for that right now, and it's probably something that does happen at some point. But right now, every time they propose it, it gets knocked down by the SEC. Biden just put in the new SEC chairman. He's a little bit more open to that, so we'll see. I hope it doesn't. There's so many cool things that they're trying to pass right now that would really help me out, but it seems like all of that's been put off to the sidelines for right now. Yeah, I know. Can't you just contribute to the Roth and wait to deploy the cash later date for a pullback? You could do that as well. You could also you just put the money in the Roth and buy like a money market fund. A lot of people that say, hey, I'm going to put my $6,000 in, but I don't like where the market's at. Could you put it in your low volatility fund? Sure. Yeah. Put it in a low volatility fund. We'll set some alerts for when the markets fall. We can do a lump sum deposit later. You take the chance that we don't pull back, but at some point, right? Yeah, right? Yep. The old Tesla decline there. Yeah, I don't know. I didn't really look at Tesla today. That's not really a decline, right? That's kind of you would say Tesla kind of just did what the markets did. It was just a slight down day. 1.6% for Tesla is like, 0.1 for the stock market. So not a big deal there. We got Mama Jazz saying June, before or after my birthday. Maybe that'd be a good birthday thing. Just open back up and start talking to people. I love it. You started buying your Verizon $55 calls. Have you seen Merck? Yeah, well, I like Verizon. That's a good one too, but I like where Merck's at for something like that. I bought some more today. Your average is 67 cents. They expire on the 19th. Yeah. All right. It's a pure directional play at this point, so you're just wanting the stock to move higher. The time value is obviously going away rather quickly. It closed right at $55 today, so you are just purely saying, I need a bounce, a pretty good bounce, very quickly in Verizon. Because you're not going to see a whole lot. Like if it goes from 55 to 55.20, you're not going to see much. I mean, maybe 3-4 cents change in your option there. So you need a decent bounce in Verizon. I like the idea of Verizon higher, but by the 19th, that's cutting it close. Yep. Mm-hmm. You bought today Tesla's 110. Why are you guys buying so close? You bought it today. You only got a couple days left. I don't like that. Why don't you go out to the next month? Yeah. Yeah. Some math says lump sum, some say dollar cost average. The math is very clear that lump sum always beats dollar cost averaging, but when they do those studies, they compare a lump sum on the first available day of the year to dollar cost averaging once a month. If you break it down even further and you do weekly, we did a class for customers on this, that actually beats the monthly. So it goes lump sum, weekly, monthly in terms of deposits, getting the most out of those deposits there. You've been banging your fist for Merck yesterday and said, yeah, oh, you liked a Merck too. All right. Yeah, here we go. You found it. You're here. You enjoy the ride. Closed at $75 today. You just hang on there. Space call, you puts on space and calls on Facebook. Now you got some time on those, or are you doing the March 9th or February 19th as well? So hopefully you got a little bit of time on those. SpaceX or not SpaceX, Virgin Galactic. I like the idea of that one. Just a little bit of a pullback there, as long as you got time. Yeah. You think the stock market's overvalued? The Russell 2000. Not the S&P. Yep. Bristol Myers. Yeah, also a nice pullback there. Maybe a little bit more to go on that one, but I like the looks of that one. And then healthcare in general, you're not getting any help, right? It's obviously strong, everything's steady, but you're not getting any. You need a good day in there where the sector sees a little rotation, even temporarily. That would be helpful. All right, I'll wrap it up there, I think. Yeah. I like it. All right, have a great rest of your day. Thanks so much for coming by, and we will see you again tomorrow. But thanks for watching. Subscribe. We're almost there. We just got to get to 100,000. Then I'll quit, right? It'll just be the end of it. We'll just stop there, and everybody just sit around and have a good time, man. See ya.